The market, as you know, has been extremely competitive. There's been a lot of capital coming into the retail space, and that has been especially true in places like Germany, for example, or Sweden. Yields, of course, have compressed, so we're looking at a very toppy market in terms of price, right? Yields are low. The way we've been looking at that is, okay, we need to be very, very strict on our NOI growth projection. So we need to make sure that when we are buying the shopping centers, there's a lot of growth in them, right? That's the way in which we're going to make money, even in a very, very pricey market as the one we're facing these days. So the theme of repositioning, for example, in Germany, Sweden, places like that has been very, very high in the agenda for us. We're looking, as you know, these hypermarket chains are starting to shrink in those places. 10,000 square meter units start to become 5,000 square meter units. They focus on what they do really well, which is grocery. That's great for us, right? They kind of refocus their business, become a better grocery anchor, which is what we all want them to do. They become more profitable because their ratios work better, and we take back some space that normally is very lowly rented and allows us to increase rents quite nicely, generate nicer returns, and especially more importantly, generate sustainability in that shopping center in which you have the tenants that are right for those units. You split those units, you kind of recalibrate those shopping centers to their current tenant and customer demand, right? So that has been big thing for us, and we've been very successful doing that, and we want more of that. Actually, we're looking for that, especially in Germany and Sweden. The periphery still offers, a differential yield level, has compressed, but still quite attractive relatively. You're buying above 5%, above 6% level sometimes, and that becomes, at the current cost of financing, quite a nice income return. And because of the fundamentals of those markets, consumer expenditure is coming back, consumer confidence coming back. You can see that in our sales, right? Our shopping center sales, the sales in our stores of the portfolio that we manage in those places has improved dramatically, and that's bringing very nice rental growth too, right? So mainly, to wrap it up, two main themes. When we talk about Germany and Sweden, it's about repositioning, Northwest Europe repositioning play, the periphery rental growth, but through expiring leases, extracting growth at that point in time in the cycle of the asset. And both of those strategies deliver the NOI growth that we need to make very nice returns in the current yield environment.